Greetings from your investment advisor, Scott Campbell, with my quarterly market update for the first quarter of 2026. Well, the bull market we've been experiencing came to a screeching halt with the attacks on Iran. The overall stock market was down almost 4% for the quarter. Although not all areas of the market were down, mid cap stocks were up 2.5%, and small caps were up almost 1%. Following up on foreign stocks, which I noted as having a great year last year, they were down 1.25% for the quarter and down over 10% in March. The disparity in these numbers is proof of why investors need to diversify. Not put all your eggs in one basket or one sector of the market like AI or crypto, no matter how exciting and juicy the returns are. The large cap tech stocks, referred to as the Mag 7, which have been on fire for the past 2 years, were down 4% in the quarter, while mid caps and small caps produced positive returns. Regarding bonds, short term bonds were slightly positive for the quarter, intermediate term bonds were flat, and long term bonds down by 0.75%. Obviously, the defining event of the first quarter was the conflict in Iran. And the media sure has done what the media does: harp on the negative, doom and gloom, the end is near, all is lost. But did you know that the market has already returned to the record levels it was just before the conflict started? Of course, that doesn't make the news. This episode is more proof of another of my ongoing messages: stay invested. The market recovered most of the drop due to the conflict in 4 days. Stay stay invested, or risk missing out on a huge day, which is the worst kind of FOMO. And about the market reaction to the conflict. We get less than 10% of our oil from the Middle East, and only 2% of that oil comes through the Strait of Hormuz. The U.S. is a net exporter of oil, meaning we export more than we import. 10 years ago, the U.S. imported about 20% of our oil from the Middle East. So conflicts over there meant gas shortages over here. That wasn't very good. The price of oil has gone up so much because the rest of the world depends on the Middle East and the Strait of Hormuz for their oil. As soon as ships can move freely through the strait, our gas prices will go back down to the low levels they were before the conflict. But our gas here in California has always cost about $2 more per gallon than the rest of the country, because about 30% of California's oil comes from the Middle East, because a new refinery has not been built since the 70s. And the refineries were built to process the thicker crude that comes from the Middle East, not the lighter crude that comes from North and South America. Governor. On the U.S. economy, growth has slowed to about 1.3% annualized for the first quarter, which is down from earlier mid quarter estimates. Full year estimates put GDP growth in the 1.8 to 2.5% range. The economy is, as they say, steady as she goes. Positive but tempered growth. No indications of a recession, though. The final print on first quarter GDP is due out in a couple of days, so we'll see for sure. The unemployment rate remains at 4.5%. The number of job openings has decreased. We're in what they call a low fire, low hire environment nationally. Inflation remains in the 2.5 to 3% range. The current spike in oil prices due to the conflict has increased inflation because the cost of energy is a part of most goods and services. But when oil prices rise because of a spike in oil, prices also drop rapidly when the price of oil drops. The inflation we experienced in the past administration was much more entrenched because it was caused by the massive amount of money the government printed and flooded the economy with. From the COVID relief that dispersed money from a fire hose to the $1 trillion Inflation Protection Act, which was really an environmental bill that brought on all that inflation. Now, if you've been listening to me, you know that one of my major concerns is the federal debt, which currently is running at over 39 trillion. And they got to stop spending. They got to pay attention to this. And now we're finding out about all the fraud. First, all the spending. Now we're finding out a bunch of it was and is being stolen. That's our tax money. As taxpayers, we must demand accountability and transparency. And what's this nonsense about not allowing audits? The government should be subject to all the same rules and regulations of the private sector. Now, unfortunately, I have another reason to encourage people to save taxes. Now, regarding an issue that's not market or economy related, but is a big problem related to the rules for investing. Our elected officials, politicians, are allowed to use inside confidential government information to trade stocks and make multi millions of dollars in their investment accounts. Years ago, the government went after Martha Stewart for insider trading, for God's sakes. For you younger folks, she's a grandmother who became famous for cooking and baking and decorating homes. They went after her, but politicians get a free pass. Insider trading is cheating. It's using information none of us have to enrich their accounts. When politicians talk about how corrupt corporations and corporate America is, I just roll my eyes. My goodness. Yes, there's some wrongdoing by corporations, but nothing compared to the government. Hello, pot? Yeah, this is the kettle. Okay, I'll put my soapbox away now, but seriously, government spending should be everyone's number one issue. And this insider trading is a problem. There's no way all that profit does not influence. Every politician should be asked about insider trading every day until they outlaw it. Now, looking ahead to the markets, obviously the Iran conflict will have everything to do with everything. If the strait is open soon and shipping returns to normal levels, the uncertainty will dissipate, gas prices will drop back to their new lower levels, the economy and stock market should get back to the above average performance expected right up until the conflict started. So things are looking positive for the balance of this year. Please reach out if you have any questions, need any help, or just want to talk about your account. Thanks a lot.